Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is a Forex quick look. I'm going to take a look at the Aussie versus US dollar. Today's date is October 28th, 2024. Let's get started. If we look at the hourly chart, the price has been trending pretty regularly to the downside here. The price moved from a high of around 0.6941 at the beginning of the month, and at the end of the month, as we trade today, the price low came in around 0.6580. That's about 340 pips over the course of the month, and through that time, the price has mostly stayed below both the 100 and 200 hour moving average. That's the blue and green line in this chart. Yes, we did move above it right here, but the momentum could not be sustained. We moved above it right here, and the momentum was even weaker. This move and this failure above here restarted the rotation to the downside, where we then moved below the 100-day moving average. That's this blue line right through here, and we stay below it right here and here. Right here, we started to use the 100-hour moving average as a resistance and rotate to the downside. The last two corrective moves to the upside have come up pretty short of that 100-hour moving average. As you can see, we are a good distance away from that 100-hour moving average right now. So the sellers are really pushing to the downside in the Aussie versus US dollar. Now, if the price is going to start its move back to the upside and start to correct higher, we're going to need to get above that 100-hour moving average and then above the 200-hour moving average as well. And then we could start to talk about maybe coming up toward the 100-day moving average. But until then, the sellers remain more in control. Now, as you can see, we are approaching this 61.8% retracement. Now, where does that come from? And you need to go back to the 4-hour chart to see where that is derived from. Let me spread it out a little bit here, and you can see going back to this point right here, which is the beginning of August, to the high price that we saw in the month of October. The 61.8 comes in at 0.6575, and that's our next target on the downside. Again, our low price and trade here today came within about 4 pips of that at 0.6578, as a matter of fact. So with about 4 pips of that level, we are going to need to get below that level in order to increase the bearish bias to the downside. If we do, then we'll look toward this low price right here, and then it opens the door for further selling with maybe this low right here, and then this swing area down through here as next key target on the downside. This goes back in time as well. So those would be the steps to the downside, but the first step is to get below 61.8% retracement. Looking at this 4-hour chart, in addition to the 200-day moving average, we also have this swing area here where we had a number of different swing lows coming in here, forming this support level. Then the support turned to resistance. We moved to the downside. We came back up to the area, got traded above and below the level right through here before basing against it and moving higher here. We returned back to it here and moved higher. In trading last week, we came down to that level, actually moved a little bit below and then tried to hold support against it into the weekend before closing lower and below that level, which was more bearish coming into today, and today we've rotated back to the downside. So this area right through here between 0.6618 and 0.662879 is going to be key resistance on the top side going forward. Inclusive within that is the 200-day moving average. So sellers are still in control. Get below the 61.8, opens the door for further downside. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.